If you're thinking about purchasing a home in Chicago and you just have no idea where to start, or you just want to get educated on what the steps are to actually get a home and buy a home in Chicago, then this video is for you. I'm John Sintich. I'm your guide to all things real estate in Chicago. And in this video, I'll be discussing all the steps of buying a home in Chicago in 2023. It's going to be different across different years. So right now, as the time of this video, it's the middle of July of 2023. And so this is going to be all the steps that you're going to be experiencing when looking to purchase property. We're going to go from step A to step Z. So step A, you have no idea where to even start. You haven't done anything. You've just said, I think I want to buy a house. We're going to go all the way to Z, closing table, signing the paperwork, getting your keys and moving in. Everything you need to know is going to be in this video. So you can skip ahead to different chapters if you're further along in the process, or skip back, depending on where you are. It won't hurt my feelings if you skip ahead. It's okay. Before we get started, I want to remind everyone watching this video that I am a licensed realtor in the state of Illinois. So if you need to buy, sell, invest in real estate, relocate, just reach out to me. I'm more than happy to help you out. My team or myself will reach out to you within 24 hours of you reaching out to us. All the contact information is going to be on the screen or in the description below. You can call me, you can text me, you can email me. Just say, hey, I saw you on YouTube. You need help buying a house. You need help selling a house. I want to invest in real estate. That's all you need to do. Okay, let's dive in. So step one of buying a house is, you're doing it right now, congratulations. It's getting educated. It's just doing some research. It's watching a YouTube video like this and discerning what the actual steps are of buying a house. So once you've done this and you want to buy a house and you want to start looking for a home and get in the process of buying a house within the next 90 days, the next step that you're going to take is get pre-approved. So you're going to go to a mortgage lender or a bank, preferably a mortgage lender, because they're a lot more flexible and they're a lot more knowledgeable, and their customer service is so much better than a big bank. No offense to the big banks out there, don't come after me. Keep my money. I keep my money in a big bank, so don't take it. So you want to get pre-approved. You want to make sure you can actually get approved for a mortgage to purchase a home. Unless you're paying cash, if you have enough cash to purchase a home, great. Can I have some? Give me some of that. And then we'll go buy a house together. More often than not, you're going to be purchasing a home with a mortgage. And so you got to figure out what you can afford. And so the pre-approval process is very easy now. They make it simple. You reach out to me, I'll give you the number of a phenomenal mortgage broker. You reach out to them and they have you fill out an application. And then they determine what you can borrow, what the limit is of how much you can borrow. And then they're going to give you an estimate of what your monthly payment would look like. Okay, and that's the most important thing right there, is the monthly payment. You're buying a house for the monthly payment. It's what you pay every month on your mortgage. So if it's affordable to you, then it's the same every year for 30 years. So if you are comfortable with your monthly payment, then the price of the home doesn't quite matter as much as you would think. Because if you stay in the home for 30 years, you're going to make money on the house. It's going to appreciate. It's just historical trends. The average homeowner stays in their home for about 5 to 10 years. The next step is going to be budgeting for that monthly payment. So different homes that might cost the same amount of money in different areas might have different monthly payments. You have to factor in things like homeowners association fees if it's in a homeowners association, especially if it's a townhouse or a condo. It will absolutely have an HOA. Property taxes, if they're higher in one area versus another, that's going to affect your monthly payment. Your homeowner's insurance. If it's in a floodplain, you're going to have to pay more money for insurance. Your homeowner's insurance is going to vary as well. Your mortgage interest payment. Right now, as I film this video, mortgage rates are at 7%. So you need to determine, hey, how much am I comfortable paying every month for a mortgage? And then we go and find properties where you do the math before you even go look for them. Make sure that they're gonna allow you to have a monthly payment that's under that threshold of your comfort. So if you say, hey, I wanna pay no more than $2,500 a month, then we're gonna find properties that, based on their purchase price, the taxes, the HOA, it's gonna be under that $2,500 amount. Now that you've budgeted for your monthly payment, you know what you can afford, then you're gonna consult with your realtor. So we're gonna sit down, we're gonna have a consultation. We're gonna determine your what's and your whys. What are you looking for in a home, and why are you looking for it? You're going to determine your location. Where do you want to live? I do more videos on that, how to pick the perfect location for a home. I'll actually share that video on the screen, so you can go find that. Definitely watch that video. It'll help you determine how to pick the right location and why you want to live there. Again, it's important to focus why. Is it because they have great schools and you have kids? Or is it next to a really nice nature preserve where you can go hiking if you're into outdoor activities? Is it in Chicago? Is it in the, the up and coming, hot, booming West Loop where there's all these restaurants, bars, shops, and things like that? You got to consider your location, where you want to live and why. Then you want to determine the type of home. Do you want a single story home? Do you want a ranch? One level, no stairs? Do you want a finished basement? Do you want a 2-story home? Do you want a split level home? Do you want a condo? Do you want a townhome? Do you want a high-rise condo in the city? And why do you want them? Do you want the ranch because maybe you're older and you don't want to take the stairs? Or maybe you have an elderly family member that's going to be living with you that doesn't want to negotiate the stairs. Or maybe you just prefer a ranch, you prefer that style. Or do you want a condo because you don't have to take care of much maintenance outside. You don't have to cut the grass. You don't have to put a new roof on. It's part of your homeowners association. You don't have to shovel the driveway. So you want to determine all of that. And ultimately, why do you want these things? Then based on that consultation, I'm going to send you 5 to 7 properties directly to you that fit those criteria. And then we're going to go look at them. First virtually, right? I'm going to send them to you, probably to your email. And you're just going to look through the pictures, look through the information on the listing. And then depending on how you like that, we're gonna go look at them in person with our pre-approval letter in hand, because we know we can afford the house, because we don't want to waste our time looking for homes if we're not pre-approved and we can't afford them. More often than not, I'll meet you at the properties, but maybe you're flying in from out of town, maybe you're relocating, I can pick you up from the airport, I can pick you up at your hotel, wherever you're staying. Then we're gonna be viewing these properties. You're gonna imagine yourself in the home. Once you find the one that feels right, it checks most of your boxes, and it's affordable, it fits that monthly payment budget, and it has most of the things that you want, and we're gonna make an offer. I actually just created a video as well about what you need to do to get an offer accepted in today's market. So I'll link that video up as well. Definitely watch that video because it'll help you avoid frustration. If you're ready to make an offer, it's gonna help you make strong offers that actually get accepted in this competitive market. We're gonna be briefly going through the offer structure here in this video. Basically what it is we're gonna offer price, we're gonna determine what your earnest money is gonna be. Earnest money is a good faith deposit that goes towards your down payment up front within 2 to 3 business days of the acceptance of the contract. It's usually 1 to 2% of the purchase price. So let's say you're buying a $450,000 home, you're typically gonna offer $4,500 in earnest money. That's not in addition to your down payment. It goes towards your down payment, it just gets paid up front. And it's absolutely refundable if your inspection goes south and you don't like the property, if you can't get the loan, or the property doesn't appraise for the value that you're paying for it. Those are all stipulations where you get that earnest money back. Are you gonna be asking for a seller credit to help you buy down your interest rate, or help you with inspection, or help you with repairs? You're gonna pick a closing date. So when do you wanna actually take possession of the property and close? Then you're gonna determine your inspection. I always recommend inspecting your property with a licensed inspector. They're gonna go through the property with a fine-tooth comb, and they're gonna find all the issues with the property. So always get an inspection. Even with new construction, you should get an inspection, so you know what's going on with your property. In the inspection, you're gonna be looking for big ticket items, cracks in the foundation, a failing roof, failing mechanicals, black mold in the attic, things like that. Also in today's market, you might be considering offering to purchase the property as is to be a competitive offer if you're competing with other buyers. Buying a home as is essentially means that you're not gonna be nickel and diming the seller after the inspection. It says, hey, I'm willing to buy this property in the condition that it's in. It does not mean you can't have an inspection, and it doesn't mean you can't ask for a credit or a repair if something comes back on the inspection that's very alarming. But it helps your offer be a little bit more competitive. We're gonna ask for tax prorations. So in Illinois, we pay taxes for the year before. So right now in 2023, I'm paying my 2022 taxes for the time I lived in my property last year. When you buy a house, you're not gonna pay taxes for the year before, so the seller's gonna credit you the amount plus a little extra that they lived in the house. Typically, we ask for between 105% and 110% of the taxes from the previous year to be credited to you when you close. Then they're placed in an escrow account, and then that's what you pay every month. It goes towards your monthly mortgage payment. If you have to ask for a home sales contingency, we'll include that in the offer as well, meaning I have to sell my home in order to purchase this home. And that's a whole nother issue we can get into. It is hard to get those offers accepted right now. It's just easier to take an offer that has no sales contingency. So you've taken my advice, we've written a strong offer, and congratulations, it gets accepted by the seller. Awesome. So what is the next step? So the next step is actually gonna be connecting with a real estate attorney, which I can totally recommend. Phenomenal real estate attorneys. They cost between $500 and $700. That's part of your closing costs. They're gonna help get you through the attorney review portion of the sale. They're gonna make sure that all the T's are crossed and the I's are dotted on the contract and everything looks hunky-dory. And then they're gonna be there to help you make inspection requests in writing formally if you need to do so post-inspection. Then within 2 to 3 business days of getting that offer accepted, you're gonna submit your earnest money, and the seller's agent will provide those earnest money deposit instructions. Sometimes you gotta wire it, sometimes you drop off a check to the office. There's a few ways to do it, but it's all in writing. All those instructions are taken care of by the seller's agent. Then within 5 business days of the offer acceptance, they're going to be doing an inspection. So you have 5 business days to do that inspection and then send those requests, whatever they may be, to the seller. So again, I work with a variety of great home inspection companies that I can recommend. You're going to go out with them, myself, you, and the home inspector, and we're going to look through the property. It's going to take anywhere from 2 to 3 hours. We're going to be looking throughout the property for any material defects. What's important to note, the things that you really want to be concerned about, so we don't go to the seller with all these million requests, because they're going to probably back away from the deal if you come to them with 300 things that you want them to fix. Major items that are going to cost you thousands of dollars if you move in and they're not addressed, those are the things we want to worry about. Let's say we do our inspection and maybe there's a few things wrong. Maybe we ask for a little bit of a credit from the seller, or maybe there's nothing wrong and we move forward. We're past the inspection phase and the attorney review has been completed. The contract looks great. The attorneys both sign off on it, the seller's attorney and the buyer's attorney, or through the attorney review period. The next step in the transaction is going to be the appraisal. So an appraisal is going to be ordered by the lender. What that is when the lender orders it, a third party comes out and gives an opinion of value of the property, because the bank wants to make sure they're not lending more than the property's worth. Congratulations. Let's say the property you agreed to pay $450,000 and it appraises for $458,000. You just got $8,000 in equity immediately. If it appraises for less than the sales price, so let's say it appraised for $445,000, then we're a little bit short because the bank is not going to lend you a dime over the appraised value of the property. So you can either agree with the seller to lower the price of the home to $445,000. The seller can require you to bring $5,000 extra to the table to cover that difference, or maybe you guys split the difference, $2,500 a piece, to come to that $5,000 mark. More often than not, the house is going to appraise for the value that you've agreed to pay for it. Once that's done, you're going to be doing everything that the lender needs to get that loan clear to close. So they're going to probably ask for, I don't know, a few pay stubs, maybe a few things that are needed, like getting your homeowner's insurance completed to get your loan finally cleared to close. Once that happens, your loan is cleared to close, we schedule the closing. The lawyers will get together and they'll find a way to schedule that closing at a title company. Once the closing day is established and there's a date on the calendar, we'll schedule our final walkthrough. The final walkthrough is typically done the day before or the morning of an afternoon closing. So myself and you, we will walk through the property, make sure the buyer has taken everything out of the home that is not included on the contract, make sure that the home hasn't been burned to the ground, or all the things that were noted on the inspection were taken care of and fixed. Most of the time, everything looks great during the final walkthrough, and then we go to the closing office. You sign a bunch of papers with your lawyer, and congratulations, you take possession. You are now a homeowner. You get your keys and you move in. That is A to Z, all the steps associated with purchasing a home here in Chicago. I hope you got value from this video. I hope it was informative. If it was, please do me a huge favor, like this video, subscribe to my channel. I do a lot buying, selling, investing in real estate in Chicago. Thanks for watching, and I'll see you on the next video.